The Kwacha has closed 2025 among the world's strongest performing currencies, and the reasons are clear in the data. At the center of this performance is copper, of course. Throughout 2025, copper prices rose by more than a third, pushing toward record levels to near 13,000 United States dollars per ton on the London Metal Exchange. This surge was driven by tight global supply and rising demand from electrification, renewable energy systems, and AI-related infrastructure. For Zambia, Africa's second largest copper producer, the impact was immediate. Copper accounts over 70% of Zambia's export earnings. As prices climbed, export receipts increased, foreign exchange inflows strengthened, and pressure on the Kwacha eased. The result was a currency that moved in step with the commodity that underpins the economy. By late December 2025, the Kwacha had appreciated by approximately 24% against the United States dollars. On December 29, it strengthened by 0.6% in a single session, reaching its strongest level since early November. As of this particular report on December 31st, 2025, which was simply yesterday with forex markets closed for the New Year holiday, the Kwacha was trading at approximately 22 Kwacha 55 ngwe and 22 Kwacha 60 ngwe per dollar, okay, reflecting mid-market levels stabilized around 22 Kwacha 58 ngwe from the final trading sessions. We are here because President Hakainde Hichilema made economic growth non-negotiable, stabilized the fundamentals, restored confidence, and kept the focus on productive sectors that turned policy into measurable progress. This particular performance was not isolated. Other African commodity producers experienced similar currency movements, confirming a broader trend where metal-linked economies benefited from higher global prices. However, Zambia stood out because copper dominates its export structure more heavily than gold or diversified metals to do in or peer economies. Policy decisions reinforced these market dynamics. On December 26, 2025, Bank of Zambia implemented the currency directives 2025 required or requiring domestic transactions to be settled in Kwacha and Ngwe, with defined exemptions such as mining companies continuing to pay certain obligations, of course, in United States dollars. Now, this directive increased demand for the local currency, reduced domestic dollarization, and strengthened monetary control, supporting stability rather than undermining it. Crucially, the Kwacha's performance also reflects confidence in Zambian mining trajectory. The government of the Republic of Zambia policy has set a clear long-term objective to increase copper production toward 3 million tons per year by 2031 to 2032, backed by mine revivals, new investments, of course, and project development. Within the data provided, expectations for 2025 production ranged between 950,000 tons and potentially above 1 million tons, despite energy constraints earlier in the year. Looking ahead, the Mingomba mine, scheduled to break down in April 2026, signals why markets are pricing Zambia differently. The scale and quality of Zambia's copper deposit are reshaping expectations about future export capacity, of course, foreign exchange inflows, and long-term balance of payment strength. This forward-looking assessment is already influencing currency behavior, okay? In simple terms, copper strengthened, export earnings rose, dollar inflows increased, and confidence retained. Monetary policy then reinforced those fundamentals by anchoring domestic transactions in the Kwacha. Now, that is how the currency closed 2025 stronger. The data shows a direct line between commodity performance, production, outlook, policy discipline, and exchange rate stability. As copper demand continues to rise globally and Zambia positions itself for higher output, the forces that supported the Kwacha in 2025 remain structurally in place going into 2026.